Hi traders and welcome to the Technical Analysis Market Watch on Friday the 12th of May. So I've seen a flat week really in movement on the key indices and some of the currencies, but we have seen enough movement to actually hit the zones that we've been watching over the last few weeks. So let's jump into the charts and see if we can identify any trades for today or early into next week. All right, we'll jump into the Aussie straight away. And as you can see, we hit the 200 moving average, which was going to be a bit of a roadblock for it, and then came back down and hit the 20 moving average in last night's trading. Now, look, when we see a movement like this, the Aussie's been behaving very, very technically for a lot of reasons, actually, but the main one being that it's actually caught within a zone. So when markets get caught inside a zone, whether it's a currency or whether it's an indice or whatever you are trading, they do become very, very technical, and they do look for the key support and resistance that's very close to it, because when the market's a little bit unsure of where it wants to go or where it needs to be, it starts to gravitate most likely to the key areas. Now you can see here, we hit the bottom at around that sort of 65 area, 65.80, 65.50. And then once it did that and it hit the bottom of that trend line, as you can see through there, it sort of it bounced up and went through the 20 moving averages. Once it broke through that resistance there, the likely scenario was that it was going to hit these tops here. Now, although this box is drawn here and they've got the 200 moving average, we couldn't have known that at the time, of course, but it has hit it, tested it 3 times and then sold off on it. But it's not just here that we're watching. Yeah, this box is not drawn because of these 2 peaks here. This box is drawn because of all the peaks and the resistance that we saw right through this green box here. So there's previous resistance that wasn't very long ago, late last year, as you can see. And yeah, realistically, it's been sideways. Like, it's not really trending in any direction with any sort of force. It's hovering between the 200 pip moving average. So really, what we're looking for is all the signs that we're going to get reversals to the key support and resistance. And it did just that, hit the 200 moving average. You can see we had 3 tests of it and then failed and then came back down to the 20 moving average. Now, on the smaller time frame, this will make a lot more sense because you'll see the lower highs and lower lows and the higher highs and higher lows forming. But it's very, very important to isolate these zones when you know that the market is going sideways, because they do hold up very technically. Now, where to from here? You can see we've obviously got a 20, a 50 moving average and a roll reversal zone holding this one up. So yeah, what we know for sure is the 67-cent mark is pretty strong. If we get a bit of a rebound here, we see a bottoming out and we see a series of higher highs and higher lows, say on a 1-hour chart or on a 4-hour chart, then we can start to target the 200 moving average again and look for that 80 pips. And of course, we're not going to look for the higher target, which is around that 68, 80 area, until we get a daily close above that 200 moving average, sorry. So when we get that, that'll be a different story for the Aussie. If we get a daily close below the 20 moving average and we start next week trading underneath here, underneath the 66.80, then we'd be looking for a move back down to that 65.80 zone. So we'd be starting to target short. So really a daily close below the level here at around that 68.80 area. At the end of the week, especially if we get a weekly close and a daily close down there, which is what's going to have to happen for that to actually eventuate, then we're going to have a pretty good time, I think, trying to get down to this level here next week. So we'll be looking for weakness. But of course, if it does rebound from here and forms a series of higher highs and higher lows, the 200 is the first target, and then up to the 68.60 area if we get a daily close above the 200. But initially, the first 200 is the resistance point. All right, we'll move over to the US dollar CAD. And in a similar vein here, you can see that we actually have a similar effect, except over a bigger kind of range. So you can see here, we are going fairly sideways on the US dollar CAD and have been for a very long time. We're caught within this zone. But again, it speaks to the support and resistance really holding up. You can see here that we hit the bottom of this market. You can see at around that 133 sort of 40 area, 133.30, that we've got a lot of support here. I had previously from many levels, and then it bounced off it quite aggressively, as you can see. Two big doji candles, and then the big move up to the 20 moving average, basically the opposite of what the Aussie has done. But most importantly, though, the support and the resistance are holding up, and that's what you're really looking for. I mean, when you look at the sell-off that happened here, you know, you can tell that the move here was weakening. It didn't quite reach the previous high. You'll remember in the previous videos I was talking about how it was looking a little bit weaker here than you would have expected it to actually hit that high there at 136.80 without any blemish. But no, it actually sold off quite aggressively there, bounced off the moving averages, tried to get higher, but actually couldn't even reach the previous high. So that was a big sign of weakness for it. But yeah, the logical place for it to target is going to be the support level. So, and once it's done that, of course, it's bounced straight back up against the 20 moving average. So it's really important to identify these sideways moving markets and then trade within those bounds. You can go long and you can go short. It's just really important to identify them. Again, what we need to see now is a daily close above the 20 and the 50 moving average. If we get that, we can start to target the previous highs here at 136. But if we fail at the 20 moving average and it starts to roll over, we can start to target the 133 area again as the level for the short. Okay, US dollar yen has been less inspiring. You can see not much difference. We're nearly at the same place we were last week, really. 20, 50, and 200 moving averages all running parallel, basically sitting right at this zone. It's very, very congested here. Look, very difficult to trade, really. There's not much range in what it's done this week. Very, very minimal range. As you can see, the MACD is nearly flattening out, which is telling us that the 12 and the 26 moving averages are all but crossing or touching each other. And the 50 and the 20 and the 200 are doing the same thing. So really, until we get a daily close above the 135.60 area, we're not going to be interested in going long on this one. And if we get a close below the 133.60 area, below all these moving averages, then we can start to target the next move down to 132.30 or the 130.1 really. So that this key level here. So until we get a breakout of this zone, yeah, probably leave this one alone. We need a daily break to the low or to the high, and then we've got very defined targets. Okay, very quick look at the dollar index before we go into the euro, and you can see here that we've got basically the move that we've been waiting for, a break out of this little mini support zone. You can see we had very strong support here. The daily finally closed above the 20 moving average and that support. So realistically, that's going to bode well for a short on the Euro USD, which is what's happened. It's a pretty strong candle, but it needs to hold up there, right? We want to see this there at the start of next week. It needs to survive the next trading session and really maintain its levels at around that sort of 101, at least over the 101.50 is really what we want to see there. The Euro USD, of course, is the trade. And you can see that we've had, look, it was starting to weaken off here, like we talked about this, and you can see the MACD was dropping, it was flattening out. This has been the first close below a 20 moving average in quite some time. It's been very, very aggressive right throughout this whole period here over the last few months. So yeah, the close below the 20 moving average was significant here, and that was our first sign that we were really looking short to start to actually weaken. Yeah, how short it goes is really going to depend on the dollar index, of course, and how high that breaks out. But in the first instance, we could find probably a little bit of support here around that 108.90, 108.80 area, which is also the 50 moving average. But yeah, the 108.50 area is probably the real target. If we get a bit more of a movement down and we see a little bit more weakness, the 108.50 is probably the key target because of all the support and the resistance right through here. And it goes back all to this level here as well. So it's a pretty strong roll reversal zone. So we want to see a little bit more weakness here. And then we aim for the 108.50. But if it does start to reverse around this point here, it may test the 20 moving average from above at around that 109.68 to 70 area. So you want to be keeping an eye on that. The moving average is going to move, of course, when this daily candle continues on. But next week, if we're sitting at the exact same spot, look for a rounding bottom here, potential scalp up to the 109. 20 moving 109.60, that is, with the 20 moving average there. And if we see continued weakness and we're trading under the 50 moving average, I'd be looking for that 50 pips down to the 108.50 in the first instance, which is the first roll reversal zone where it's going to find the first reasonable amount of support. But of course, the daily close above the 20 moving average, then we can start to look at potential scalping longs again. But at the moment, the momentum is on the way down. And although we haven't got a lightning bolt on a daily, it's starting to look a little bit weak. And now we'll move on to the S&P 500, of course. And look, it's been a very indecisive week. You can see here we've had all sorts of doji candles, but all of them have been able to hold up above the 20 moving average, which is obviously important. Okay, so when we see all of these moving averages above the 20 moving, all the price action above the 20 moving average, which is also very wicky, that's really giving us all of the indications that we need to know that the market is basically sideways. Volume has been a little bit down, not unusual for the middle of May. Obviously, a lot of the earnings is out of the way now. Now the market just is taking its time to find out which way it's going to go. And it's really quite straightforward to trade if we get a daily close below the 20 moving average. So if we get a daily close below the 4100, we'll start to target the 50 moving average and the 40, 80 to 40, 50 area, which is a reasonable zone. But if we get a little bit more momentum and we kick up above and get a series of higher highs and higher lows on a 1 hour chart or something like that, then we can start to target the highs at basically 41.80. If we're going to close above 41.80 on a daily candle, then we're going to start looking at breakout trades. But really, this is the zone that we're in for now, and until we actually get a considerable daily close outside of either zone, we're going to trade right inside this. So yeah, basically a close below 40.80 on a daily would see us start to really target lower levels like the 39.50 and 3900, and a daily close above the 41.80 is our sign that we might be starting to look for longs at that point. But until then, take the series of lower highs and lower lows, or higher highs and higher lows, to those zones on the smaller time frames if you want to scalp it. But while it's trading above the 20 moving average, just be wary that the support is there and it has held up quite significantly, really, in a very flat week. So I hope everyone's had a good week's trading. I think we've had good moves inside the zones that we've talked about. No big breakout moves, but reasonable trading. So hopefully you've been able to catch some scalps. It'll be interesting to see what the weekend gives us, and these levels will probably be tested again early next week. So we'll keep an eye out on that. Have a great weekend, everybody. I look forward to seeing you all next week.